Good morning, traders and investors. Welcome to this Thursday, November 9th edition of Pre-Market Prep with StockOdds. Joel Elconin joining you here with Rob Friesen on this September 9th. My youngest daughter's 26th birthday. You guys probably heard me.
Congratulations.
Yeah. I know I don't look like I have a daughter that old, but I do. And definitely got some good price action here in the markets. Looking at the September contract here for a few more days, be rolling over to the Monday or rolling over to the December on Monday. This is one of the biggest range days we've had in quite some time. We got hit overnight, sold off to 44.85.50. That was below the low from yesterday. Turned around. We were already on our way back up when the ECB made a move, a tapering move. And you know what? The market liked that. And we are up. We are back knocking on the door. We're about 7 handles away from our all-time closing high of 45.35 and a quarter. Currently trading 45.27. Been pretty much straight up for this entire session today. Crude. Talk about a volatile instrument. That's down 4 cents to 69.26. High is 69.89, a low is 67.84. So crude really moving around today. Gold, it's struggling to hold that 1800. It's down $4.10 to 1789.40. Silver trying to find support under 24 like it did 4 times last week. That's flat. Let's call that flat at 24.05. Bitcoin tight range, less than $2,000, not seemingly affected by the volatility in the market. Up $505 at 47,025. And Ethereum, when I say Ethereum's flat, it's flat. The futures are right, unchanged at 45.36 and a quarter. Rob, let's bring you in here and discuss the day, well, the night and day. How do you just tune out the overnight action, look at the stock odds, and then get ready for the upcoming trading day?
Well, I mean, you got to look at the last few days. You certainly have to look at the pre-market, and we did have a overnight low set in, and it seemed to pull up from that, right? So you just factor in all that. But StockOdds is kind of revealing too, in that how much it generates of longs versus shorts and things like that. So after 2 days, there was some really good discounts and odds of bouncing back. I think Lee Cooperman this morning, he said something that I think is a true statement in the way the market has been acting. And he said the market is self-correcting. Right? I mean, if you look at all the slight pullbacks that we get, they seem to rebound all the time. And the other part of what he said that I often say, and that things will continue along until there's a surprise or some sort of a catalyst that reverses it. He made the comment that recession was the instrument that would really correct it, and we don't currently see that in the horizon right now. So a lot of different themes going on. Obviously, the market had a little bit of a discount that it bounced back from here. So when I was looking at what to do from last night, I looked at the market, looked at how things went, but just went into StockOdds, and I focused on the NASDAQ 100. And so generated a lot of long ideas. I'll give you an example. MRNA came up, DXCM came up, Marvel came up, Xilinx came up, Okta came up.
How were you on the balance today, long versus shorts? I mean, your original, because it kind of had we did have a couple down days in a row, a little bit more seesaw action. Just where are you at on the balance there on your initial run?
Well, it was pretty much all longs that were generated. And then the choice is the Qs or the SPY to be short. Obviously, the Qs fit the NASDAQ 100 better, right? So I tested them both pre-market. I shorted a bit of Qs and a bit of SPY to test, which one was sort of more, bullish or, kind of seemed to give a better feel. And so,
And how do you do that? You do that with just small
well,
orders?
like when we had, when we had that rally pre-market, we spiked up on, like, bring up your charts again.
Sure.
Well, I mean, I can show it too.
I got
here.
it. I can do it here real quick. The upper left one is the 15-minute chart. So what time are you?
So see that first big spike that we had up on the E-minis there?
Hey, here?
Yeah, right in there, sort of.
Yep.
As we spiked up and kind of started to falter there, I shorted both the Qs and the SPY just as a test to see how they were responding. And I felt that the SPY was a bit more resilient than the Qs were at that time. And so ended up shorting some Qs against the long S&P 100, or sorry, Qs, NASDAQ 100 stocks that I have. So and then I switched that out to SPYs now. So I'm short the SPY. So against the long stocks.
Okay. And is that something you do?
You can
often?
You can swap out if you see a benefit to one, which it's just no different than pair trading. Where's there better premium? After something's moved, when the market already has an event, we're starting to get close to completing. Well, we're past the first hour of the day, right? So most of the volatility and the bigger moves happen in that first hour. We've talked about this before on the show. So just looking at opportunity and yeah.
Okay.
I mean,
all right. Let's I can release the screen here.
Yeah, I can show a few things here. Just some of the ideas. Let's see here. So let's see what we got here. So the dashboards, they can be really helpful for dialing into these opportunities like reversals, especially if you've had a couple down days in a row. And you can already see that, in terms of performance over the next 3 days, just look at the skew here. So here we have positive odds. This is obviously an RSI, discount. Let's say we're oversold, but it's just a number. We don't know what's going to happen next. This is telling us what the probability and the return might be after 3 days after this significant discount in the RSI. So an oversold condition. And then you get your ideas here, but just look at this skew from the bearish reversals. Performance wise, not a lot of bang for your buck, even if you were right. Look at versus the longs. This is what I mean by, I agree with his statement. It's sort of self-correcting. You get any of these little discounts, the market seems to brush it off and rebound pretty quick. And then we go higher again. We're still bound to make new highs in the market the way things go. So if you don't, like, we've talked about a lot of themes, right? And we have our opinions and we say, well, there's a perfect storm developing, right? We talked about a few things yesterday and that's all true. But at the end of the day, the market's right. and we do what we do until there's a surprise in the other direction, or we do what like they did with El Salvador. You buy rumor and you sell news, and so we have to have a really good argument to have a major correction. We have to have some sort of surprise, and anything could happen. I mean, it could be political, it could be terrorism again, it could be California slides into the ocean. I mean, I don't know. Right? It could be any kind of a surprise. So but that's what the market isn't able to factor in. And that's why over the long sample, we like to trade the relationship between, long dollars and short dollars. And you don't always have to be, completely hedged, but you have to have the knowledge and the ability to hedge. And most people, when they get started at hedging, they usually hedge at the wrong time. What would be the wrong time in your mind?
After your initial trades are moving against you.
So if you've already had a significant loss,
yes,
right? And then at a capitulation point where you go, well, I don't really want to throw the towel in, but I think I'll hedge. Now you're opening yourself up to losing on your hedge as things come back. So
yep.
Most often, I mean, this is a hard thing to say to people when you already have a loss and you're at your uncle point. That's usually the time you need to put more on. But again, the risk is increased that if you're wrong, you really do some damage. So, but I mean, from a long perspective, it's kind of like where people, throw the towel in is usually the time to buy, which is why I mentioned to you in one of the way early shows that we did, is that, I learned from Bob something about this price discovery below areas where people tend to put stops, right?
That. Yep.
And it's like, why don't you go in front of the support level? Everybody trades in front of the support level or in front of the resistance level. Why don't you do that? Well, there's no advantage to that. Simple statement. There's no edge because everybody's doing it, right? And everybody's looking at it. Where the edge comes in is when the support level breaks and the stops get run and everybody pukes and gets flushed out and all the automated stuff, takes care of their positions and they're out. There's a deep discount. That's an edge. And so we love this aspect of acknowledging and recognizing trends, not arguing with it, not being smarter than that. I'm not smarter than the market, but where the money can be really made is in this constant process of mean reversion. So this is just an example of RSI discount. But if you just look at the indicator, you could be really early. If you just look at the indicator, you're going to make false assumptions. So it's this combination of a signal from an indicator, but what is the subsequent odds and performance expected so that I can truly be probability based in how I apply myself, right? I want to be a probability-based trader, so I need some data that says what is expected next, not from an opinion, not from a presumptuous basis of, well, this chart pattern says this will happen next. Well, unless you have data to actually support that in how many occurrences it's had, you don't really know. I mean, we have chart patterns here too, tech patterns, if you want to get specific in looking at them. And it says after a reject high low, like here's Chewy, for example, hey, lots of people, well, we adopted a dog, everybody's adopting animals, you need Chewy toys, right? So it rejected a low, and it was showing that its probability of moving was there. That's very different than just looking at a pattern by itself, U-turns and things like that. And you'll find as you study some of this is that, some of the things that people think, well, that formed this pattern, so it has to come back down. And our odds are saying, well, every time it's formed that pattern in the past, it's actually gone up. And so I find that kind of funny. I check with people sometimes. They go, hey, look at this chart. Tell me what you think is going to happen next. Oh yeah, it's got to come down because it did this and this. And I go, well, the odds actually say that it's going higher. So I just find that a funny thing. And sure enough, the StockOdds is usually right. So
can't fight the odds.
Well, yeah, I mean, overall, it's not bad, right? I mean, it's not 100%. It's not 100%. It's not even 90%. It's not even 80%. But it's better. It's better than 50, and that's all you need if you smart about the business. You can make a lot of money with 55% winners and 45% losers. You can have a whole career on that.
Yeah, Rob, a quick question from Eric M. When you open the short Q and SPY, and as a test for resiliency, how big of a position did you initially short in comparison to your longs? Well, you did it in the pre-market, right? So you did you did not have your longs on yet.
I didn't have anything. I didn't have any longs on, and the thing was, they were $7,000 positions, not much at all. The point was, I would have easily kept them if they were advantaged, right, at that point. So I could have just left them alone. As it was, I ended up covering and then looking for the next rally and how things were going to open. One thing that was interesting this morning, just to point out, was that the pre-market indication on the advancers over decliners was minus 700.
Explain that again, Rob. Go ahead.
So there are a few various forms of looking at advancers over decliners. I just simply look at the NYSE one, right? It's something I've always used, so it's just I'm familiar with it. But it was at minus 700. So that means that the amount of downticks on NYSE stocks at that moment, when you add all the upticks and all the downticks on just for the NYSE, it was minus 700. So, and now we've moved to positive, where are we at here now? We're at positive 807. So we've gone from minus 700 to positive 800, which is getting kind of overbought according to, all of the other days in comparison. I'm not saying the market can't go up anymore. I just say that it's getting mature in that how many stocks have, they keep buying the offer, right? So we've had a rally. It's maturing, probably roll over at this point. That's why I switched out to the SPY, as I mentioned, right? So, but just there's a couple of things you got to look at pre-market, and one of those is, how are the stocks actually opening, which then became kind of advantaged for you to get your longs on this morning, right? So there's two things you can do: get your longs on at the open, and then get your short on at the open right away, or you can get your longs on and you can wait and get your short on. And so different days, I play that differently. Today, I waited a little bit and hedged after it started moving up. So I won't always do that. Yesterday, I just did it at the same time. Well, and yesterday was opening differently, remember?
Yep.
So I did it at the same time, but today I waited. So, I mean, there's science in the data, there's science in trading, but there's also, in any form, there's a bit of art form. There's a bit of art form in programming an algo with the right kind of inputs. There's an art form in, how you trade pairs. There's an art form in how you trade baskets, because every day's, unique. So do you drop the hammer exactly in the same way all the time? No. but you have to start somewhere. So when you're new to this business, I would recommend living within the same sector and the same industry. So, take a look at trading electric utilities against electric utilities. The information that you could use is which ones are negatively impacted by storms versus, the ones that aren't. I mean, there's going to be a big difference between the Pacific Northwest utilities and, what Louisiana is facing. Obviously, one is going to have more expenses. I mean, they're going to pass that on to the consumer as best they can later, but initially they're going to have a hit to their bottom line with the amount of, unless they get some handouts, I guess, from the government. But so it's like, yeah, you can focus on a group. You still have to acknowledge the macro that might be influencing it. You can go into something boring. Maybe there's nothing going on in consumer staples, and you can take a few longs and a few shorts from there and start practicing this, relative performance, your longs versus your shorts. And you can always do what you've always done if you've never shorted, and that is just go in and find the ones that are most advantaged to perform long. I mean, today, without any news, just from looking at it yesterday, the odds on MRNA were favorable for a long today, and we can show that right here. So there's MRNA in there. I'll just let's see here. Oops. Save changes. So, I mean, 61.1 odds. There's been 36 events. You can drill down and look at all those different events that it's had in the past, and average performance. And that's just open to close. So, anytime you're getting towards 0.3%, I mean, it's a reasonable trade. And then look what it did the previous day, right? It was down 3%. So you had, and that was close to close performance. So you had a really nice discount, and you had a great starting point for those, that trade open to close, I guess. I mean, you can look at it 3 days too, see how powerful it is. Over 3 days, it's back up to 2.83. So what it went down in 1 day, it's expected to, labor back to get it back over 3 days. But that's how the market works a lot of times, right?
Right. Yep.
So,
Yep.
So I mean, I just chose that not because I have an opinion on Moderna. In fact, I probably have, truth be told, I probably have a negative opinion on Moderna myself, but I've followed the history of it for a while. So I personally have a negative opinion on the company, but that doesn't matter. It doesn't matter what I think. It doesn't matter what my opinion is. What matters, and I run into this all the time. I get a lot of people, they want to trade Regeneron because they have an opinion, or they want to trade Pfizer because they have an opinion, or they want to whatever. Like, does the market care? Does the stock care? Does the CEO know you have an opinion? It doesn't matter. Go into the data and live in the data. If you're a chartist, you would obviously have to live by your charts, right? So here I'm just going by the data, right? So we do this. This is a great idea for you, is like, look at it open to close, see if it makes sense. Look at it over the 3 days, see if it has that potential to really spring back, giving you a bit of insulation, giving you a little bit of more horsepower to the trade. But really, that's what it's saying. It's saying it dropped in 1 day, but the odds after that, there's been 36 events like that, and the odds afterwards are sufficient enough to get it to come back to where it was before it dropped. Now, it might exceed that. Other people might see this, and suddenly you have that, like, wow, everybody's got the same information, and it roars on back. And then there's the other thing. Once it starts coming back, people feel it's going to, move back to a previous resistance level or support level or whatever it was up there. And, they're going to be on the bandwagon too. So it can, this is part of the problem with ETFs, is that so many people are trading ETFs and the volume's all there and less on the stocks, is that, they become very, drag along, push along to everything else. And so, the SPY or the IWM or any of these ETFs can just kind of rip on their own for a while, right? And then the stocks have to play catch up, right? So anyway, yeah.
Any shorts today, Rob? Any shorts? I mean, besides straight out shorts. I know you had some long and some shorts. Maybe we'll wrap it up with
very,
one of those.
very few. Shorts are I'm short AZO.
Okay.
I don't know. I mean, auto parts have had quite a good run. I'm short that one. The odds were to be short. I'm short BMY.
Okay.
I'm short AEP. I did some utilities short today only because they were kind of boring. I mean, the advantage went to the tech stocks. The Qs were, pretty strong overall. Pre-market, they've had a couple down days, remember?
Mm-hmm.
So, there was a little bit of a turn happening there. So I focused on the NASDAQ 100, but then I was short some utilities. And like I said, BMY, I'm short, AZO. Yeah. One of the shorts that's not working out that I thought would have worked out was Citibank. I stuck with my thing on that, even though I think Lee Cooperman said that he was favorable on Citi. So anyway, I'm down a little bit on Citi, okay. But the data was fine to be short otherwise. So somebody's opinion can certainly change it maybe.
Yeah, sometimes I'm seeing. I mean, also you have a strong market. Yep.
But I mean, I had way more longs than shorts anyway. So
good.
Anyway, that's the day. I got to cut out a few. Oh, it's almost time, so I got to cut out here. A really busy day here. So
okay, all right, good input here. Just wrapping up the market. We got to 29.50. We backed off 6.5. Really above average range day here. So it's going to take a lot of momentum, perhaps, to get back up to that new all-time closing high. But that's where we're at, up 1075. Good day in the markets. And we have really the only other relevant level we're looking at now is our high from yesterday's 24.75. So need to get back up there, first things first. But thanks for joining us. Pre-market prep with StockOdds. Back with you for tomorrow. Everyone, have a good day.